Well, the IRS has two different approaches for audits, and they do this to basically be as efficient financially as they can in terms of doing audits. If they see somebody and go, here, you didn't report some income, and if it's not an astonishing amount of income, they will issue what they call a letter with a number CP2000 at the top corner. And this is a letter that says, hey, we know you didn't report this, typically a 1099, and therefore, we've done the service for you of actually calculating how much more additional taxes you owe. Please pay now or give us a reason why this is incorrect. So you generally have 60 days to respond to that. That could be scary to get one of those. And most of the time, they're wrong because they're making assumptions. The second type of action that the IRS can do is to actually initiate a formal audit where there's a human. We call them actually revenue agents, but everybody else knows them as an auditor that actually has your case, looks at your files, and is thinking about you and your situation. This is much more serious because if an auditor gets involved, he basically is not going to quit until he finds something he can hang you with in terms of paying more taxes. You need to know that auditors are measured within their team based on how much tax revenue they bring in the form of additional taxes, penalties, and interest. So they're motivated and ranked on a monthly basis in terms of how much they bring in. They're not going to quit until they have made you give them some money or assess you with money that you're going to have to pay. You really want to avoid an audit altogether. And the biggest way to avoid an audit is to have a good tax return. There are more advanced techniques that we use within CryptoTaxAudit in what we call our bulletproof return methodology, where we put extra things in there that you wished were there. If you knew in advance, you're going to get audited. So there are ways to be more intelligent about how to prepare a tax return, but the best thing to do is make sure that your tax return accounts for all the 1099s that you have. And unfortunately, people receive 1099s, but they never are certain that they have all their 1099s. They might have forgotten one. And then you're not sure if your tax preparer has actually entered that information correctly, because you get your tax return. There's a lot of numbers on there. Some of them you were expecting. It's in the range you're expecting. But you don't know if all the 1099s were accounted for. Why? Because when a tax return is prepared, in the metadata, when you electronically file, are entries that state which 1099s were used in the preparation of that return. And so it's a very easy thing for the IRS internally to look to compare the metadata of the 1099s with the actual 1099s received. This doesn't happen immediately. This doesn't happen when you file your tax return. It's something that happens later on in the summertime, when it's at that point in time the IRS has received all the corrected 1099s. They're all loaded up, their database is full and ready, and now they can do their comparisons. Generally, when we see the mismatches, if you fail to account for one of the 1099s that the IRS has on file for you, then you will get a CP2000 letter where they're going to tell you that you forgot to report this 1099, which showed so much income. They've calculated additional taxes for you, and you need to pay that additional amount. Or you can send them back explanations on why that calculation is incorrect, which of course typically it is. The problem with 1099s is that we don't always know if we have them all. And tax return preparation software doesn't always list the 1099s that were used in the preparation. So we generally find ourselves as tax preparers in the dark a little bit in terms of how your tax return was prepared, or even if you prepared it, if you included everything that you thought you included. So this is part of the challenge. And the IRS uses a CP2000 letter to catch people who fail to report everything.